Do you have any idea how you bank? And I mean, how do you interact with your bank? Do you go into branches? Do you do it all online? Do you use a mobile device to bank? What are your banking habits? This is Tonight. I'm Bruce Whitfield. Tonight, I'm joined in our Cape Town studios by Brands Laduma Research Manager Piet Geustyn to find out. Piet, give me a sense, please, of how South Africans are banking. I see you break it up into different demographics, 18 to 24-year-olds, 24 to 35-year-olds, and then the rest of us old toppies.
Yeah, Bruce, thanks for having me. I'll join you in the old toppies group. I think what we try to do, especially with our audience where LSM, I know it's a very big issue many times for companies, the way they break down consumers. But we found, especially in the township and the black market, that LSMs seem to fluctuate quite a bit. You know, if I own a kettle, I might be LSM 6 rather than 5. And if the kettle breaks, I'm LSM 5. So we decided to rather break down the behavior in 3 age groups. And although we've split the, let's say, 25 to 34 and 18 to 24, we'd like to call this group the Ubuntu Millennials, especially towards the younger end of that age group. And that's basically people who have the pressure from traditional families and traditional ways of doing business, but also tech savvy and young and wanting to relate to their peers on a global level. So it's actually a group that's very much under pressure, and that's what we'd like to explore.
Give me a sense of how the 18 to 24-year-olds behave when it comes to banking. And I say behave, I don't mean go into overdraft, but what tools they use to conduct their banking.
Right, so we found that family plays a huge role, at least when deciding what bank to have or what bank to bank with. And I think there, obviously, the price structure of the bank plays a large role. Almost 80% of our 18 to 24s just have one bank account, and it's traditionally a savings account. As far as interaction go, cell phones are growing steadily, but ATMs and branches are actually still very high. So physical interaction is, you know, that surprised me at least. It's higher than I thought it would be.
Even between 18 to 24-year-olds, the kids who are supposed to be so good at the tech are quite reliant still on the branch network. Do you drill down as to why that is the case?
We haven't asked specifically. I do think that because of the way, let's say, the township community is still structured and the type of phones that these guys have, I don't think you know, that cell phone friendly banking is where it know, can be yet. So even though you might have a lot of feature phones passed down from family members to the younger members, you know, that might be expensive to purchase. So the feature phones, obviously, if you have a app for that, then it helps. But I still think drawing money at the ATM is essentially how these guys go on it.
It's also interesting, I mean, you mentioned how important family is when it comes to joining the bank that you join. I'm sure you did. I certainly did. My first bank account was with my parents' bank. Until you get to a stage where suddenly you want this bizarre idea of financial independence and you then go and your first strike out. And that's probably when you get to, say, 24 or 25 years old, which is the next segment. Do you see a big change as young people grow up into that sort of income earning stage of their lives?
Absolutely. You know, especially in this market, we see guys exploring and going out and finding on their own. What actually stood out the most is that banking rewards was the most important when deciding which bank to choose in this age group. I think, you know, there's a gap for banks there is to capture somebody in the younger age group and then produce a multiple offer going further, because we do see people switching banks, especially since the most popular bank maybe doesn't have all the options, the rewards, the apps, the stuff like that, and there's definitely opportunity, I think, for banks to create a captive audience and tailor make solutions to them.
Does cool matter? when it comes to banking? I remember 10, 12 years ago, the most loved brand in South Africa, ABSA, said it was the most loved. And then FNB said it was the coolest. And this one said it was the bluest. And this one said it was the greenest. Does cool matter? Does brand positioning matter when it comes to where people choose to bank? Or is it about the rewards and the price mostly?
I think cool matters, but not as much as we'd like to think it matters. I think if you are under financial pressure, then irrespective of where you bank, you'd like to be, or irrespective of how cool the bank is, I want the bank that gives me the most rewards, the most feedback, the most financial security. So I think that is, Bruce, you're touching right on it. That's the struggle these Ubuntu Millennials are sitting with is, am I staying with the cool kids and maybe losing out, or am I actually going for what's best for me? And that's a duality I think that this group faces, especially the 24 or 25 to 34 where the guys start earning their own income.
Now, I doubt very much that anybody in either of those groups, either from 18 to 24 or 25 to 35, owns a checkbook. Does the checkbook make any sort of impact in the old Toppies group, as we've called it, 35 to 49? I've got one somewhere. I don't know where it is, but I've got a checkbook somewhere from a previous life. But the banking habits must change quite dramatically as you get into a slightly older demographic.
I think so, yeah. It's even this demographic interacts on their cell phone with the bank, you know, and I think that's where you'll probably find a duel with, let's say, the mobile networks. As data gets cheaper and apps more friendly, people just jump on their cell phones, especially if they don't have access to branches. And I think that's where financial education is so important. I think even though there's a huge gap for it, people are still reluctant to maybe accept the technology.
I mean, there's a sense also that comes from people, the marketing message is, we do this, we do this, we do this. And much of the feedback that you've got through your research is, don't tell us, educate us, teach us how to do this better. And you would think it's in the bank's best interest, but nobody seems to be getting that right.
Exactly. The one thread that's been going right through all of these age groups is, yes, we want financial education resounding 90% plus. But what surprised me is that I don't mind a personal call from my banker. I don't mind you contacting me, giving me financial education, helping me to make better decisions. And I mean, that just goes back to the old age way of human interaction. Even among all of this technology, you know, we had an option for online videos or maybe sessions at the branch or whatever, but the number one was personal call from my bank's assistant or banker. And that's fantastic things to see, because it allows tangible results for financial institutions.
How important is price across all of these segments? Because up until about 3 or 4 years ago, it was free rein. The banks would charge for you walking past the door if you took an extra breath. That's what it felt like anyway. And then the market got shaken up by the emergence of Capitec and Capitec's growth into the middle market. FNB used its technology to bring the average cost of transactions down, and the rest of the banking sector has been rushing to catch up ever since. Price as a differentiator, is it big?
I think price, but I don't think as big as we'd like to think. I think if you sell a package or give a package or multiple offers at the right price, then that will probably attract more people than just the price alone. I think obviously for the lower end, the younger market especially, sure, having the one bank account that's the cheapest, that's important. But as soon as I go over to, let's say, multiple accounts where the rewards become more important, then I don't mind spending a little bit more because I actually get back.
But it's interesting because this research then tells the banks what works and what doesn't. And everybody's got a version of a reward system, and you need to be something of, I don't know, an actuary to work out exactly the benefits and how it all operates and how to maximize these things. But it does show that the fluff matters from a marketing perspective in terms of getting the attention, particularly of younger individuals who, if they like it, will stay for longer.
Absolutely. And you know, we did a little cross-tabulation for people who actually saw the bank everywhere they went and saw the advertisements or bank products. And I don't know if it's the right thing to say, but I don't know if it had such a big impact actually on if people decided to bank with the bank, especially not on the, in the, let's say, middle and younger ages. So tangible rewards, obviously our society are living under financial pressure, so short-term loans, stuff like that is very prevalent among the consumers we did the research with. So, along with rewards, being able to have access to quick money, if I can call it that, was very important as well.
What was the single most astounding thing? I mean, you research all the time. What was the thing you looked at and you went, wow, that's an astonishing piece of information that is valuable currency for the banking industry?
For me, I think, as I said, with the financial education, that people don't mind physical interaction. If I had to think of one thing now, I would probably say the reliance on family and friends in the younger group, but also then again going older. But the reliance of family and friends, and I guess the impact that marketing messages would like to have, might not be as big as we expect it would.
So what is the trick then that the banks are missing?
I think it depends from bank to bank. We did the research, bank specific as well, and you can start picking out. If a few tangible points, longer operating hours, more branches, I understand that's obviously cost involved in that. Sure. But I think access points to individuals, and actually everybody gives the message, we care and you are important to us. But I think going through with that message, and it's much easier. The channels are there, it's just actually using it.
Brands Laduma Research Manager Piet Geustyn, thank you very much for joining us this evening, and thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.